Good morning, Africa. This is Wake Up Africa 2025. Happy new month. It's the 1st of February, and I'm delighted. So delighted to continue to host Wake Up Africa. And today, my dear viewers, we are looking on to access to finance from monetary financial institutions, then from the bank, from the, you know, um, different MFIs, monetary financial institutions, to micro, small, medium enterprises towards addressing the capital needs to create entrepreneurs, entrepreneurship, and create more goals. Today, we want to look onto how can MSMEs, micro, small, and medium enterprises, access capital from monetary financial institutions. I'm your host, Austin Makani. Before we begin, I would really like to thank my producers, Essa and Noreen, wherever you are. Thank you for producing Wake Up Africa. This is episode 6. This is February. This is a new month. Stay tuned. We shall be back. And today, my dear viewers, we have colleagues from the East. We have colleagues from the West joining to share contributions. How does it happen in their country? Do MSMEs have access to monetary financial institutions to acquire capital, cash, so that they can start businesses? But again, we shall have studio guests today who will tell us from one of the banks, one of the local banks we have, who will tell us exactly to why MSMEs do not access credit from the banks. Stay tuned. This is Wake Up Africa and Rise and Shine. Welcome, my dear viewers. This is Wake Up Africa, and I did say in the introduction, we're looking onto the access of finance. We're looking onto the access of capital by MSMEs from the banks, from the monetary financial institutions, so that this money that the MSMEs could access can then go and create jobs, go and create employment to many, many young people, as we are all so much aware borrowing yet again from the show last week that why is it that the education system does not address the gaps, the employment gaps? And we came with the conclusion that the education system is not designed to give us solutions. The education system is designed to give us tools so that we are able to address any other need, any other gaps. I'm trying to imagine. Again, this is not to bring last week's topic to this week because today we are looking on to access. I'm trying to imagine if the education system was designed to give us solution to, let's say, employment. What then would have given us a solution to maybe health? What would then have given us a solution to maybe innovation? So the education system just gives us the tools in general. And when we are able to use these tools, we are able to find solutions to different issues that emanate into our lives as we transverse through this interesting journey called life. But today, out of the tools that we acquire in life, we are going to discuss today why access to finance by MFIs, by small medium enterprises is difficult. Why is it that banks do not easily lend money to MSMEs? And I'm happy, my dear viewers, to tell you that I did, as usual. They say when you have a class, it is the teacher who learns more. I really did some work, and speaking to other people, I came up with about 5 reasons But as I did say, later on today, we shall have colleagues joining us from a bank. They will introduce themselves and tell us why it is that they do not give loans to the MSMEs. But these are some of the reasons that I came up with from discussing with various interesting people. And I also welcome your ideas, your take through our social media platform. I will announce it again later on our social media platform so we can take them forward. Number one, risk assessment. So banks often hesitate to lend money to small business owners or no business owners at all due to higher perceived risks that are associated with borrowers, this kind of borrowers, compared to the already existing businesses. Here are some of the reasons to this hesitancy. The risk. So small businesses may lack a track record of stable income or assets to secure the loans. MSMEs, micro, small, and medium enterprises, may lack track records. And I'll explain what this is. And I'm happy that as I'm discussing this, I'm also a former banker. So MSMEs may lack track records of a stable income or assets to secure the loan, making it riskier for the bank to lend them. Established businesses typically have a history of revenue, established businesses. So you can see when you're an established business, you can already track how much did you make in January? How much did you make in February? How much did you make in March? So because of this track history of revenue and assets, this can again be used as the collateral. What the bank does is they come to your business, they're able to see how you have been earning in January, in February, in March, 3 months, 6 months. Then they're able to say, okay, so you've been able to earn 1 million shillings a month. We are able to give you 80% of that, or 40% of that, or 50% of that, because they've seen that consistency. Now, when it comes to MSMEs, micro, small, and medium enterprises, they do not have the track record. They do not even have the assets. So, how can the banks be able to provide them with MSMEs? We are going now to discuss later on during the program with the banks as to now when businesses, when young people in the streets with brilliant ideas want to come up with, you know, businesses, how can they now be able, without track records, to get access? Banks will have to give us the response to that. Reason number two, similar to reason number one, was credit history. Credit history. And then, as I'm saying this, I'm sure most of us who want to start businesses or we've already established businesses but do not have the enough capital to grow our businesses. These are some of the notes you can take so that you're able to access capital from the banks. Number two is credit history. Small business owners may have limited or poor credit history, making it difficult for banks to evaluate their credit worthiness. Okay? If you do not have credit history, how can they ascertain credit worthiness? How can they tell how much are they able to lend you? Okay? Established businesses, on the other hand, often have a solid credit history that banks can use to assess their ability to repay the loans. Their ability to repay the loans. So we've seen the risk assessment. From the risk, um, the inavailability or unavailability of stable income by uh, the MSMEs, and now credit history, now not being able to track how much you've earned in a given period of time, also does not give you the room to access credit from the banks. Reason number three as to why banks hesitate to lend money to micro, small and medium enterprises is cash flow. Cash flow. As we all are aware, small businesses may experience, or always or oftentimes experience, irregular cash flows. What does that mean? Today you have sold items, or today you've offered services and you've gotten so much money. And then it takes you about 1, 2, 3 months. before you are required to give the services or offer other products, etc., for you to have regular cash flow. Then it makes it harder for banks or MFIs to give you a loan. Vis-a-vis, established businesses that have more steady cash flows, which reduce the risk to the bank. We will be back with two more other factors, but for now, risk assessment does not give so much of a room to MSMEs, credit history. How do you track your expenditures, your revenues, and the cash flow? The more you do not have regular cash flows, par, par, uh, you have so much today, you do not have a lot in the next couple of days, and then you have so much like that. When the banks cannot track how your cash flows come in and out, then that reduces your credit worthiness. We'll be back after a few seconds. This is Wake Up Africa. The topic for the day is access to finance by MSMEs to give them capital so that they can start businesses, so that they can create employment, so that we have more young people generate or create employment for themselves and create employment for other people. Broadcasting live from Dar es Salaam, Tanzania. This is Wake Up Africa. Stay tuned. Welcome back. Rise and Shine Africa. We are rewriting the Africa's narrative. We are rewriting the Africa's narrative, and we are looking onto as to why access to finance from monetary financial institutions by micro, small, and medium enterprises towards addressing capital needs gaps to create entrepreneurs, to create enterprises, to create businesses and employment could create more jobs. I did mention the first factor from my study being risk assessment, credit history, cash flow. Going on to number four, which is collateral. Almost most small business owners do not have or are limited to assets, which can pose as collateral for the loans. Now, banks, in order for them to give you access or to give you credit, you have to have collateral. You know, we've spoken of cash flows, credit history, risk assessment, but you also ought to have collateral. Now, collateral is item of value that the bank can then, if you're unable to repay the loan, they're able to capture that asset, sell it, and get back the loan that they've given you. Now, most people, especially micro, small, medium enterprises, do not have collateral. Now, the banks cannot give you a loan because they do not have that security that if in any case you're not able to pay back the loan, then how are they able to recover the money? And why should the bank be bothered? Remember, the money does not belong to the bank. The money belongs to people who deposit that money. And from depositing the money, they want something in return. So by lending them to you and imposing that interest, which you'll soon be looking at it, they're then able to give, credits or interest to those who've deposited the money with them. Now, if now they're not able to regain money from you who has taken a loan from those financial institutions, how are they then be able to give credit back to those who deposited the money into the account? Number five, regulatory requirements. Regulatory requirements, of course. People who put money in the banks need to have the security that their money is safe in the bank. Due to this, the governments have to impose regulations to the banks, okay? Regulations to the banks so that in case of anything, if the bank runs insolvency, then they're able to capture the assets of the bank and pay back those who had put their money. Now, due to this, banks may face stricter regulatory requirements when lending to small businesses, MSMEs, which can increase the cost of providing loans to the borrowers. Loans to the borrowers to MSMEs have very high interest rates. What does this mean? This means now that the borrowers, the micro, small, medium enterprises have to get loans at higher interest because their businesses possess or have very high risk. This then is what I did mention earlier on, the interest. Most MFIs in Africa, Wake Up Africa, have high interest rates and are not loan friendly to micro, small, medium enterprises. One of the reasons is because of irregularities that they have, cash flow, credit history, risk assessment, lack of collateral, but we're looking onto the regulatory requirements. Hence, little or no business growth. What should then be done, my dear viewer of Wake Up Africa, as we want to change the narratives, as we want to transform Africa, as we want to create more jobs, as we want to create more businesses through agriculture, through mining, through livestock keeping, through fisheries, through all other sectors that thrive very well in Africa? What should banks do in order to be able to give loans to MSMEs so that MSMEs can now be able to start to grow their businesses? Stay tuned. As soon as we have our dear colleagues from the bank to join us and share what they have to share, what they have to respond to this. We will then be rewriting the narrative. We'll then be changing the narrative of Africa to provide solutions to micro, small, and medium enterprises that come in. This is Wake Up Africa, broadcasting live from Dar es Salaam, Tanzania. I'm your host, Austin Makani. Behind the camera are my producers, Esther and Noreen, and soon we shall be joined by colleagues from Tanzania. I'm delighted to wait for your contribution. Aminata from Arusha, Tanzania. I'm delighted to wait for contributions from my brother Remy from Rwanda, Elliot from Burundi. I have Mr. Tops all the way from Nigeria, but my dear friend at heart, um, Alan Subi from Uganda. I'm not sure if Patricia Ndede will be able to join us today. She lost her CEO. They were in a barrier yesterday, but she is with us in spirit. When she'll be able to join us, she will give us her contributions all the way from Kenya. Collins from South Africa, delighted to continuously anticipate contributions from you and all other contributors. But we also will be joined today by another very great guy, my brother Moses, joining us from Arusha. I will have his biography read shortly, but this is Wake Up Africa. We will be back. Stay tuned. Access to finance from monetary financial institutions by micro, small, and medium enterprises towards increasing the capital needs gap. Decreasing the capital needs gap. What needs to be done? How can micro, small, and medium enterprises get more credit so that they're able to grow businesses? And as they do that, create employment for themselves and for other people, and together build the economies of Africa. We will be back. Rise and shine, Africa. This is Wake Up Africa coming to you live from Dar es Salaam, Tanzania, going across the entire African continent. And the objective remains that we want to change the narratives. People from outside Africa perceive this beautiful mama land, Africa, as a continent that cannot do anything, that cannot do anything. We cannot even access capital from our own, very own banks to give to micro, small, and medium enterprises to start businesses. We've looked from my study different factors that hinder banks or make banks hesitate to lend money to small and medium enterprises. These factors that I did mention are risks, credit history, cash flows, lack of collateral, and regulatory requirements that are imposed. And due to that, the interest rates become very high. What I studied long time ago in economics called barriers to entry. But again, when we impose stringent barriers for people to access loans, how then can we create jobs? How then can we create employment? How then can we address the employment gaps? Because as we did the study last year, there are probably a third of all graduates across Africa that get access to jobs. Only one third. What happens to the remaining two-thirds? Where can they get jobs? Okay. Um, it's interesting. It just crossed my mind that at times you can have assets, you can have collateral, but still banks cannot give you a loan. Why? Because you lack all other things. And I was discussing something with someone yesterday, very interesting, that at times, the processes, and again, I'm marking this question so I can ask my fellow bankers joining shortly. You're applying for a loan today. You've presented everything. Like you have the collateral, they've done the risk assessment, and you're good to go. You have a good credit history. Your cash flows, from audited financial reports show that you've got steady cash flows, etc., etc. But again, it takes quite a lengthy period of time within them financial institutions before you have a drawdown. So I was thinking, we in Africa we have quite a number of public holidays. Okay, let's say those that come over Christmas in December or Eid in a given period of time, and then you go to ask for a credit from a bank so that you're able now to go and do clearance at the port, or you're able to import stuff that could be consumed during the holidays. Then the banks go on holiday. Of course, banks go on holidays. The building are there. Then you're told this manager, that manager, or this file or that file, or we're not open today. There's something happening. You cannot access the credit up until such and such date. It's been a while since I left the banking sector. But things happen that this the final approval, etc. Just things just come up, and then that date pass. Okay, your target was that this consignment comes so that I'm able to sell these items for the holidays, so that I'm able to make money because these goodies. Maybe you're importing, let's say, you're importing Christmas trees. They are required for a specific period of time. Okay, maybe you're importing dates. They're required during, the holy month of Ramadan. People break their fast, they eat dates. After that, probably that market will not be there anymore. And you're coming to release the credit. You're coming to give them the loan way after, that period is passed. Do we still need that? Do you still have the guts to tell the banks, you know what? By the way, I do not have the need for this money anymore. So, due to risk assessment, credit history, cash flows, collateral regulatory requirements, which then impose the high interest rates, banks may be more cautious when lending to small micro, small, and medium enterprises because they offer less favorable terms compared to the already established businesses. What are we going to do? What do we then have to do at this juncture, Africa, so that, these are our banks, our governments, our people, our businesses. And for me, I'm looking at a country like Kenya and saddened that we'll probably not have Patricia today. The MSMEs in Kenya contribute, I think, close to 80% of their GDP, their gross domestic product. The contribution comes, 80% comes from micro, small, and medium enterprises. If all other African countries really look onto enhancing, empowering the MSMEs, then they're able to earn more into their GDP. And the little that they contribute, or the more that they contribute, then goes to de-risk their loans so that they're able to bring more businesses. But again, de-risking. This is another question I'm marking for my dear fellows who will be joining us momentarily from a local bank here in Tanzania to share their insights, to share their view, so that we are now able to address the issue. We have many people graduating from universities. We did see last week that Nigeria has more than close to 600,000 young people graduating every year. Then a country like Seychelles has close to 100 graduates every year. Pretty manageable, but it's a smaller population as well. Now, when these graduates come and they're not able to access loans, when we upskill, when we reskill, when we improve skills for our young people so that they're able to go and start businesses, but yet again, they do not have capital to their businesses. What ought to be done? What should we do, Africa, so that we are able to grow as a continent? Shall I ask, are we, is this the best this generation can come up with? Is this the best that we can do? Is this the best of our thoughts? What ought to be done so that we are able to give credit to people to start businesses? We're able to give credit to, MSMEs. They're people that have already established their businesses. Yes, they possess a lot of risks. Yes, they do not have credit history. But you see them in the street vending every day. It's that same mama sitting by the roadside selling donuts. It's the same gentleman, a young guy, who is selling ice creams day in, day out. I know of a guy that was selling ice creams so many years to my school when I was doing all levels and A levels, and they still sell ice creams. Can we still doubt these people that if we extend a little bit of credit, they will not be able to repay? These are the people that we see every day. You know, banks have the tendency to sit back, relax, and say, "Yo, I'm having people to walk in. I do not have." And surprisingly, I'm borrowing this from my experience as a former banker many years ago. We did. I used to head an acquisition portfolio, so would go out. But most of the loans that are given by the banks are to the same very companies and individuals. That they take loans, they do business, this and that. We hardly have new businesses. We hardly have new loans. And so when we have new businesses and new loans, that makes it difficult for a bank to increase their capital portfolio. The capital of the bank remains small, the banks do not grow. But what about the number of banks? Number of banks. Countries like South Africa, such an economy, such a robust economy, I think probably one of the leading economies in Africa, has only four banks. Four banks. Yes, the entire South African Republic has four, one, two, three, four banks. Four banks. What does this mean? This means the entire, population that banks with South Africa puts money into four institutions, and these four institutions now have a huge capital to give out now as loans, and because they have huge capital, they're now able to reduce, yeah, bring down the interest rates. Now, Countries like Tanzania, and we shall hear momentarily from people in the practice, we have more than 50 MFIs, more than 50 monetary financial institutions. What does this mean? That huge junk that South Africa enjoys in Tanzania, probably similar junk, is divided into smaller banks. So I have an account here, I do not have an account there. So we split that into the smaller banks, and hence that capital reduces. Now, in order to protect that capital, like the bees protect the hive or anything, that the way you protect that capital is by increasing the interest rate. And when you have an increased interest rate, that means the cost for loans become very high. So we need initiatives and programs that support small and medium enterprises, farmers, petty traders, uh, such as government-backed loan programs and microfinance institutions, which may provide alternative sources of financing with more favorable terms. Are we sweeping out the banks? Are we sweeping out the banks? I will then go to mobile network MNEs, mobile network operators, MNOs, mobile network operators, is when I come back from a short break. This is Wake Up Africa. We are looking today onto the access of finance from monetary financial institutions, MFI, here in Africa, towards addressing the capital needs so that the MSMEs are able to create jobs for themselves. And through creating jobs for themselves, they're creating jobs for other people. This is Wake Up Africa, sixth episode, 1st of February 2025, broadcasting live from Dar es Salaam, Tanzania. Thank you for watching. Stay tuned. Wake Up Africa, rewriting Africa's narrative. Rise and shine, Africa. This is Wake Up Africa. The objective still remains that you and me, watching Wake Up Africa today, are to change the narratives of Africa. How are we perceived outside Africa? Last week, Tanzania hosted the Africa Energy Summit, and we were honored to have we are honored to have 39 heads of states from all over Africa come to Tanzania to discuss M300. What does Mission 300? Which means that the countries, the heads of state have signed a compact that come 2030, we want to have reached 300 million Africans with energy. Thanks to the World Bank, thanks to Africa Development Bank, and the Rockefeller Foundation for their support, Africa is going massive. When we have more people with energy, that means we have, we are able to do more businesses. But again, with these businesses that we want to do, my dear viewer of Wake Up Africa, what happens when we do not have credit? What happens when we do not have capex to grow these businesses? What happens when we do not have capex to start businesses now that we have energy? Okay, I'm thinking about in countries like Tanzania, where the temperatures are high, it's hot in Tanzania oftentimes. Then you have an ice cream vendor, you have um mamas seated by the roadside selling vegetables, fruits. They need to make sure that they remain fresh. They need cold refrigerated facilities. They could use electricity, which we are now bringing electricity small businesses. We're looking onto schools, the education sector, that is going to benefit massively from the availability of energy resources. That means more young people will be graduating from universities. That means more jobs need or ought to be created. What then shall we do? We're looking onto the fishery industry. We're looking onto the agricultural industry, agricultural sector, the value chains, the cold storages to avoid post-harvest losses. With available electricity, yes, we are able now to avoid post-harvest losses. But again, I've harvested and I still have very good quality of produce to come into the market. But then how do I access the market if I do not have the capital to give me the access to the market? This is why today we're looking onto access to finance. And my question still remains, Africa, are we limited in terms of the capacity to think how can we reduce the risk that the financial institutions speak about when it comes to giving credit to micro, small, and medium enterprises? How can we ensure that micro, small, and medium enterprises have a good credit history so that they're able to access credit? And what history are we looking at? 3 months of history, 6 months of history, 1 year of history. Why should we impose terms that we know they cannot commit to? Do all kind of business need to comply to similar set of regulations? Do all kind of businesses need to comply to similar regulations? What about cash flows? Yes, most small and medium enterprises have sporadic cash flows. Can the banks now consider their flows that, okay, if this person is having money after every 3 months due to the nature of their businesses, how can we accommodate this kind of person so that we are able to give them credit, collateral? How can governments, how can the private sector, how can businesses buy collateral so that they're able, provide collateral so that they're able to, work with banks towards giving loans to micro, small, and medium enterprises? Regulatory requirements. Why do we have stringent regulatory requirements for MSMEs? These are the questions that we really want to come up as Africa so that we are able to change the narratives. African can, and since African can, let us give them the room to really do what they can do best so that we're able to grow more businesses, we're able to grow as countries and as continent. We have Jocelyn joining us. Jocelyn, good morning and welcome to Wake Up Africa. Delighted to have you on the program.
Thank you very much. It's a pleasure to be here. Thank you very much, Austin.
So, Jocelyn, just to give you a brief history of Wake Up Africa, this, I believe, is your first time to join Wake Up Africa. Delighted yet again to have you. Wake Up Africa is a program that intends to change the narratives of Africa. If you look onto the Western media, if you look onto the media outside Africa, and some of the media within African continent, we are depicted as a very poor continent. We are depicted as the continent that cannot do much. Last week we looked onto the education. How can the education system, address the gaps that we have? Looking onto the number of graduates that come out of our universities and institutions every year, but they cannot secure jobs. Could there be something wrong with our education system? Well, we've looked onto how can we support African businesses by buying African products and many other things so that we're able as a continent to grow together. And today, delighted that you could join, and I will give you a room to introduce yourself, Jocelyn. We are looking onto the access to finance from monetary financial institutions. Why is it that monetary financial institutions cannot provide credit to micro, small, and medium enterprises so that, they create jobs for themselves and they create jobs for other people, employment for other people. And as the country, as the continent, we're then able to create more jobs. That means more cash flows. That means more growth as a continent. Welcome, Jocelyn. Please introduce yourself. Where are you joining us from? What it is that you do, and give us your thoughts on the topic for the day. Karibu.
Thank you very much, Austin. Before introducing myself, congratulations. It's my first time joining the Wake Up Africa sessions. I hadn't known that there are such insightful conversations and discussions going on. These are, as a Tanzanian, as an African, these are very important sessions and platforms for contribution that I really congratulate you and your team for arranging those. Thank you for having me. I am Joycelyn Makule, a Tanzanian. I work in the financial sector, especially nano and micro, supporting nano and micro SMEs in Tanzania. With a background from the development sector, working across various interventions and activities throughout Tanzania and the region. And today I come in from a CRDB Bank Foundation. It's a subsidiary and a CRDB Bank group that targets on providing or creating programs and solutions that target women and youth in Tanzania. We all know our statistics towards our census data on women and youth in Tanzania, and hence through the CRDB Bank, making what we have, our population structure, an opportunity rather than what is deemed or seemed as a challenge. So we create programs, solutions. We work very closely with women and youth in Tanzania to see how can we best catalyze their small economic activities into businesses, commercializing them. How can we translate the growth that we are talking about, nurturing them into become a semi-formal sector or the economic accounting we have in MFIs for now. I'm happy to continue with the conversations, and once again, congratulations on setting up this platform for us to contribute and see how can we change the narrative, as you said, and realistically not complaining in the streets and on social media. A very good morning, everyone.
Good morning on behalf of everyone following Wake Up Africa from the entire African continent. You did mention, Jocelyn Makule, nano, just to be clear, and my viewers to understand. What did you mean by nano?
Yes, these are the segments that we can define them, the ones earning less than $1 a day, okay? The ones that the economic activities are very below micro. So there's nano, micro, and then
Oh,
medium, then small, yes.
very clear. No, yeah, Jocelyn, I have three, four questions to you. Allow me to ask you straight away as we're looking on to access to credit. Now, my first question to you, I was thinking, so at times you have, and I'm happy that you're dealing with women and youth, okay? So they come to you, you've assessed their risk and they possess less or no risk at all. Their credit history is good, the cash flow is okay, they have collateral, but then the process between, the application and the drawdown just becomes super tedious. Usually, these micro, small, and medium enterprises, the nano, want to get their credit today, do a business, and they return the funds tomorrow. Uh, kind of engagements like that. But when you have your lengthy, tedious processes, the drawdown comes maybe 2 3 months after the requirement has passed. How are you able to explain to us the processes, the tedious processes that literally by the time you get the credit, you probably do not have that need you had 3 months ago, 6 months ago?
Yes, thank you very much, Austin. And I'll give a bit of a background before responding directly to the question. The link of this session was also shared in Tanzania Bankers Association platform that I am also in. And in Tanzania, like most of other African places, banks are regulated, okay? Banks are highly, not only regulated, banks are highly regulated through the Central Bank of Tanzania and other regulatory bodies that ensure they do not, they remain strong, secure for the people who have invested in companies, countries, governments have invested in these banks. For instance, ours. So for a bank like CRDB here in Tanzania, we hold altogether ourselves and our competitors. We hold more than 80% of all the banking services of all the whatever that concerns banks, we split between us and our competitor. So that shows you how important what these banks are, how important they are to the economy of Tanzania. Therefore, they're even extremely regulated to ensure that the economy is stable. So anything that happens to these two banks that have the majority shares of all the banking or financial services altogether remain stable because they do represent the economy of Tanzania. With this, therefore, the risking part of it is also taken very, very critical, okay? Most of you have heard about, loans that are not payable. So loans that are not payable go all the way. They do not end at a financial institution per se, but they also translate on how the look when an investor is coming into the country, they look at the portfolio of loans into the country, which financial institution is poorly performing, how many unpayable loans have been dished out to corporates and whatnot. So that puts lots of, as you said, lots of stringence, but it's not stringency. I think it is safety and secure measures to ensure that these banks are really working on growth, but also stability in the economy of the country. All those words, I'm just saying that it's not bad to have all these, all these processes in place for safety and security. And these have, unfortunately, as we're making other people safer, other people's investments safer, and assuring them for growth, we are also limiting the entry of the informal sector, the MSMEs that we are talking about, since this area is considered high risk in the money world, in the financial world. These are high risk areas. So these businesses, the probability of these businesses growing or ensuring the repayment of loans timely and whatnot, they do not have data. Perhaps the records are not as they're supposed to be. So projections on the growth of the business, on their daily repayments, on how stable can this business or this economic activity remain for the next 12 or 24 months for them to repay back the funds. That is why they are considered high risk areas. So that has been the narrative, right? That has been the narrative for the longest. So CRDB Bank Foundation was created by the CRDB Bank to provide, to culminate a journey. Altogether, Tanzania has, the financial sector in Tanzania has less than 30 million account owners, bank account owners altogether. Okay, so give and take, we do not have more than 30 million bank accounts. All right, but looking at the telcos, the MNOs, MNOs are also providing mobile wallets. That is also a way of saving. But MNOs have been able to, we have more than 60 million I don't want to say them accounts, but owners of mobile phones in Tanzania. Of course, most of us have 2, 3, 4, 5 lines, but it's also because it's easy for me to have to register my account, my mobile number, my nanny at home. I register her under my NIDA ID as well. My auntie in the village who does not have is also using my ID. So the registration of having mobile wallets, if I may call them, or having registering for a mobile number is easier than having a bank account. Okay. And the country has done lots of efforts, and we are currently seeing how they are also transforming that in the financial sector. So we, from the financial sector, we're the ones who are primarily responsible for financial inclusion in Tanzania. But we do not have the only IDs are the identified IDs. So we have the national ID. Right now, that is our the only use that we can have to financially include somebody. So opening a bank account, okay? And we aim by 2030, of course, to be sure that we'll have cleaner data, going hand in hand with the efforts that are being done with the government to ensure that all Tanzanians are also registered under the national ID program or system. I'm mixing so many things because the challenges of financially including them also leads us to the access to finance that we want to get to. And we are talking about the informal sector here. So formalizing them starts by identifying them. Who are they? Where do they work? What exactly are they doing? So the CRDB Bank Foundation does that first mile. The first mile is formalizing them. The first mile is identifying them. The first mile is financially including them for them to appear now in the main financial sector database somewhere. So who's Austin Makani? Yes, Austin Makani is here. He has his small business in Ndanda, somewhere in Tanzania, selling fish every day. How much does he earn in a day? How much can he deposit in an account every day? Continuous, mentorship on the understanding of what is capital, what is daily revenue, what is profit, what should you pay yourself, what should you term as income, what should be termed as revenue, and all that. If you're paying taxes, what are taxes in the first place? Okay. If this business qualifies to pay minimal taxes, all those things support you towards accessing to finance. So the programs we create, nurture, create this journey, the entry part, that is the challenge of accessing finance. After you being immersed into this program and nurtured, we work with you for, say, 6 months. It depends on how fast your economic activity can run. Say 3 months, others up to 12 months. Then after we create that record, you are identified as a nano micro entrepreneur who has a bank account, who frequents into depositing their funding into the bank account. That lessens the risk now. So at a higher or country level, we can already see you that Austin Makani is here and has been able at least to deposit some amount of money for consecutive 3 months. Okay, now let's try Austin Makani with the financial support. This person can now qualify towards accessing funding to support the business. We've seen he deposits 10,000 every other week or 15,000 every other day. So that means he has something going. Okay, in order for him to be able to deposit 20, 30, he needs maybe, if he's doing a fish business, he needs maybe a refrigerator. He needs maybe, if he's frying the fish, value addition there. Maybe he needs some tools. Maybe he needs to make eyes for preservations and whatnot. So what should we do? The other challenge is he needs to grow his business. He needs equipment. Okay, equipment costs how much? Then we have that first phase of funding that we can trust you with, which starts from 200,000 all the way to 5 million, depending on an economic activity that you're doing. We'll gauge you on your readiness. We always say, we bankers say we trust you, but we do not trust money. Money has a way of changing people. So we give you that first stage of funding, and we support you through repayment. After you being able to repay our money and grow your business, you qualify for a second stage. And without you knowing, that is how you you graduate into the formal systems of accessing even higher funding in the financial sector of Tanzania. So our challenge, I would say, and what we are providing as a solution is that journey, as I said. The funds are there, opportunities are there, but most of us are nowhere in the databases. We are doing informal businesses. People go to loan sharks, because of not being able to, because of not being informed of how perhaps the existence of such programs. And people want money overnight. I want money tomorrow. I want money tomorrow. So they go to loan sharks, and we've seen a lot of that happening. And as a local bank in Tanzania, that is a problem that we need to resolve, and hence creating such programs that provide a journey. This is your entryway, and in 6 months' time, if you're able to follow these steps, you'll be able to unlock 10 million Tanzanian shillings, 20 million Tanzanian shillings. You'll be in the channel of the database. You'll be in the channel of being able to get to access funding. I've cut my story short, but there's a story of insurances there. There's a story of so many other things that we try to provide to the informal sector in order for them to be bankable and served through the financial institution.
I will definitely request for your time in the future, Jocelyn, when we speak about insurance and bankability of businesses. And I would really want to learn more, but really thank you for that contribution. It's really powerful. I think you've tackled many issues that I had wanted to ask. You've responded already to them, but allow me to pick your brains on two or three other things. One, you have attacked the loan sharks, and I'll give you an example, Jocelyn. For instance, I host corporate events, yeah, and I need to buy a sound system, a very good sound system. I come to you and you tell me, Austin, we have to assess the risk, we have to check your credit history, your cash flows, your collateral, but again, we have to have the interest rate, discussing that. And the entire process would probably take not less than 6 months. The one you've mentioned here at least goes to 3 to 6 to 12 months. And there is an opportunity for me to acquire that because I have standing orders to do that. Then I would go to a loan shark because the banks processes I did mention earlier are just tedious and they cannot meet my immediate need. Hence, we run to launch sharks. Now, I want to understand from your perspective. We have countries, Jocelyn, like South Africa, that is South Africa and many other countries that dash out capital up to 3 million, 5 million within 24 hours. They ask you, they check their boxes. Within 24 hours, you have the drawdown. Why can we not then have a threshold? You did mention 200K to 5 million. Why can we not have a threshold to saying that, okay, um, looking onto your account history, Austin, we've seen you've been able to deposit every month so much. So we're able to, with this, from whatever existing information, have a threshold to dash out the capital, knowing that this person is one, as you said, probably they want to buy a refrigerator to reduce post-harvest loss. So these are the people that you want to grow with. Why do I have to go through that journey with you while my needs are immediate? That will be my final question to you for today.
Yes, it is true that we are still perhaps behind or take great precautions on our customer clientele. Without being biased on a particular scenario, I would, and removing myself from TRDB Bank, now I'm just speaking as a Tanzanian and a banker. Um, I think there's a lot of work to do to steadfast our customer service. Since I would assume if I'm a client of bank so and so, and you've been supporting my, you know what I do. I've handed in all the paperwork that I'm required to do. Then it is your duty to ensure that the turnaround time is shorter and serves the purpose. Because perhaps if you don't get the 5 million you want today, even if you get it next week, it won't have the same value as
Right.
what you had wanted if you had gotten the money today. So as a Tanzanian, I think if I bank with you, if I have all my records are correct, I've followed all the instructions, then it should be faster than 6 months procedures and whatnot. Yes, that as a Tanzanian, I would urge service providers to ensure that serving your clients comes first, guiding them towards getting the service that they came for you for is done timely. From biased now, from a perspective of CRDB Bank, I myself, apart from working there, I'm also a customer. And time again, there have been so many incidences where I get a loan from my SIM banking application.
Right.
Of course, that's perhaps a salary advance because my salary comes in through a CRDB bank, but that is accessible for many other salaried individuals in Tanzania. So, it's January, somewhere there, mid-January, things are not happening and it's 2 weeks until you get your salary. There's a provision there where I can just go in and get a certain amount that supports me until I get my salary. And that is something I can just do from the palm of my hands.
Right.
Yes, but that is also because of my data is there, okay?
Mm-hmm.
The
Mm-hmm.
information is there. The bank trusts me because I've been keeping my salary for the past maybe 20 years. So they know it's
Mm-hmm.
going to come back. I think we need to do more on businesses as well, due diligence, data that is stationary and really represents organizations or companies such as yourselves for the turnaround time to be shorter. But it's
Absolutely.
just improving our services, improving our database, improving our information. Data is power. So if I know Makani's business has consistently been depositing so and so amount. We have all the paperwork of his company. We know the addresses. We know the business is booming. You've just hosted the Africa Energy Summit. So yes, Makani is definitely going to pay us money when we invest or when we lend him this amount of money for his activities.
Thank you so much. And before you give us your parting remark, or as a request for your parting remark, Jocelyn, your contributions are invaluable. Thank you so much. What then do you advise African governments to do to de-risk the loans to micro, small, and medium enterprises? Is there anything that the governments can do, to maybe reduce the stringent regulatory frameworks? Or what is it that can be done? Probably not from the not necessarily from the government, but what do you think should be done to de-risk loans that are given to micro, small, and medium enterprises? That would be your parting remark as well.
Thank you, thank you, thank you once again, Austin. Um, governments my government should recognize the strength of the informal sector in the country. Majority of what comprises our economy comes from the informal sector, and it is still growing. The world is changing. We do not have the government cannot absorb everybody into the formal sector. Our population is growing at a very high rate. So we really need to look at how we turn things around and make favorable conditions for the informal sector. Very favorable conditions, intentional favorable conditions.
Mhm.
I would give one example of what the government is doing. And I really commend and applaud that move through the Pure Alg, through the TAMISEMI ministry here in Tanzania. The government is giving loans at a council level. And these loans were previously being given through the government themselves, the councils themselves. But starting this year, they're working with banks to be able to, really take them through that journey, because they are just giving them out to whoever that has an economic activity. And the repayment was at a very low rate, so they went into losses. But now they're changing the mindset of these people that this is revenues from councils, and 10% of it, people can get it as loans, but you need to repay it so that we even reach more people. That is one measure that the government has done. But I believe there are so many others that are out there that they need to do. Provide as much guarantees. Guarantees provide safety for the banks. Because what is happening is the banks are scared of this informal sector because of the unreliability. But again, as I said, unreliability comes because we do not have data. So the government also needs to ensure that our systems are integrated. When I pay for something at the monkey shop, that should be seen at a national level. My power of purchasing without me sweating a lot on keeping records on whatnot. That is what is happening elsewhere in the developed world.
all your spendings can be traced and tracked throughout your life or your business. And that comes back. We know about credit scoring in the developed countries. People are given credit out of their behaviors, their purchase behaviors, their saving behaviors. That you can get credit at the comfort of your home based on how you're spending, how you're saving, and all this data is integrated. We've heard time and time again, the government is talking about the integration. So it would be great for us to reach that level of having clean, integrated information across all that we do. So if we are able to formalize, if we're able to identify each Tanzanian, at least it's a journey, but if we get there, Austin Makani stays in Dar es Salaam. He buys things in Kariakoo. He buys things in Kinondoni. Every week he buys A, B, and C. That your history itself should be able to support you whenever you want to get credit. I think that is the journey. That is where we need to go. So strengthening our systems, integrating our systems across at least the big structures, whether they need IDs, the payment solutions, the financial sector, that adding that with other instruments such as guarantees in the informal sector directly from the government, creating schemes for the MSMEs, for the nano informal sector. If I am to meet the policymakers today, that would be my contribution on how we can move forward. Let's strengthen our systems, strengthen our database, and move forward towards really providing impact and growth to our people. Thank you.
Thank you very much, Jocelyn Makule from CRDB Bank, one of the largest banks we have in Tanzania. And Jocelyn probably forgot or did not mention that CRDB Bank is also present in Rwanda, if I'm not mistaken, Jocelyn, and DR Congo, for your contribution this morning. And we are looking on to changing the narratives of Africa. Many of us who do not necessarily belong or have experience. I'm happy that I've had an experience. A share of my time with the bank know the tedious processes that take place in the bank because of the risks that are associated with the loans, the credit that are given to especially micro, small, and medium enterprises and what it takes. You have literally poured your heart when you spoke about your final take that the government need to recognize the strength of the MSMEs. And I did say earlier on, and I stand to be corrected, that the MSMEs or the SME sector in Kenya contributes close to 80% of the GDP. Now, when you're able to grow the SME sector, you're able to definitely grow your economy. But you also spoke about intentional favorable conditions. I really like this one, Jocelyn. The government has to have intentional favorable conditions. Yes. So we need to create an environment whereby MSMEs can thrive, reduce all these obstacles. And you did provide an example of providing guarantee, for instance, to MSMEs so that they're able to access facilities and grow the economies. But you finished by saying strengthening and integrating our systems. It's very vital. And you did say earlier on during your explanation that come 2030, you want to have a cleaner data so that you're able to have a good track record of the borrower. So thank you very much, Justin, for your contribution. We look forward so much in the near future when we're looking onto bankability of projects and businesses in Africa and what does it take. This is Wake Up Africa, ladies and gentlemen, my dear viewers of Wake Up Africa this morning. We will be back, and when we're back, my dear friend Aminata is ready to give us what she thinks that we need to do as MSMEs so that we're able to access credit from monetary financial institutions. And Justin again spoke of MNOs. We'll again speak about MNOs shortly. This is Wake Up Africa. We will be back. Rise and shine, Africa. Let's change the narrative. Can Africans be trusted by our own banks so that we're able to access credit, so that we're able to start businesses and grow our economies and grow Africa? Stay tuned. Wake up, Africa. Good morning. And this is the sixth episode, and we are looking onto the access of credit by micro, small, and medium enterprises so that we are able to create more jobs. And by creating more jobs, we are creating more employment. And by creating more employment, we are creating growth. We are sustaining our economies in Africa. And by doing that, we are able to stand as the continent. We are able to change the narrative. I'm honored and very happy this morning to have had contribution from Jocelyn Makule from CRDB Bank here in Tanzania, one of the largest banks in Tanzania. Thank you for your contribution. I now have Aminata with me and Remy. Aminata is from Arusha, Tanzania, and Remy is joining us all the way from Rwanda. Good morning, my people.
Good morning, Austin.
Good morning, Austin.
Thank you for joining. We are looking onto this morning the topic: can the banks of Africa trust Africans to give them credit so that they're able to start jobs, so that they're able to create employment for other people and for themselves? What is your take? What do you think impedes monetary financial institutions from giving credit to micro and small medium enterprises so that they can grow and grow Africa's economies? I mean, that's to start with you. As we all believe, ladies go first.
Thank you, Austin. Good morning, Africa. I am delighted to be part of the sixth episode of Wake Up Africa. And this is quite a crucial topic because I believe I am also part of the MSMEs and I am directly affected by the matter of discussion. So for me, the first and foremost issue would be policy and regulatory reforms in the sense that we need to improve on our credit scoring models. See, we are way past the era of collaterals as the measure of credit scoring. We currently have things like mobile money where most transactions take place other than bank. So if we can have integrated systems where we link together banks and mobile money applications, I believe we are able to get a greater or a better credit scoring model. Because, for instance, me as an SME, yeah, you may find most transactions are done on M-Pesa other than bank. And with the convenience that comes with it, with the amount of money that I'm able to transfer in a day, I don't see why I should get these transactions with a bank. Yes, the bank will still be there. I will still save my money in a bank. I will still do other transactions with a bank. But these transactions within the country, within, let's say, the region of East Africa, I am able to do it quicker with mobile money other than banks. And if, let's say, today banks come and assess my mobile money transactions, I think I'll be in a better position in terms of credit scoring other than my bank transactions.
Are you
Um,
saying, go ahead,
yes,
Ashley.
yes, please.
No, I'd wanted to pick your brains before I go to Remy from Rwanda. Are you saying that uh, the banks now are probably or likely to be phasing out because of the existence of mobile uh, network operators, MNOs?
Well, not really, because I believe banks are able to offer so many other services other than mobile money transaction. Mobile money is like the quickest way you can move money, and there's a limit onto which you can move money into different networks, into different countries, different from banks. And one beautiful thing with banks is that you're able to track your money and have a reversal in a more trusted manner than mobile money. As in today, when I send money to your account, before you withdraw, if something went wrong in between there, if there's a fraud detected somewhere, I am likely to get my money back other than a transaction on mobile money. So I don't think banks are phasing out. It's just a matter of balancing and seeing who does best in what and focusing on exactly that.
Excellent. Let me pick Remy's idea on the same. Probably the practice is different in Rwanda. As I was in Rwanda last week, I mean, that I really must say that I commend, and I forgot, of course, Jocelyn also said the efforts that are done by President's Office, Regional Administration, and local government to issuing loans facility to young people through the district councils. Kudos to the government of Tanzania. But one of the things that I really appreciated in Rwanda, and of course I noticed this also when I went to Kenya, was the mere fact that they do not, they're more or less going cashless now. Everything you do there, be it an Uber, be it anything, and also I think Tanzania is also coming. Uh, Everything there you buy through your mobile phone. You know, I think we ought to really impose this in Tanzania as well. But so when I went to this place for dinner in Rwanda, a beautiful place called Rwanda Universe, Kigali Universe. And from the entrance to anything you order, you just pay by phone, etc., etc. It's beautiful. Then when I was in Kenya, I went to visit a friend of mine at Strathmore University, and everything is just, there's hardly you see paper money. I went to see the family. Uber said, no, man, if you can pay us by, mobile phone. I was like, dude, I'm new in Kenya. I just got here. I do not have these applications you use, etc., etc. But I figured out my way. Even the motorcycle, Rwanda, Remy, let me pick from you. What is your take? What are the practices in Rwanda when it comes to issuing credit to micro, small, and medium enterprises so that they're able to grow and start businesses? Do you have stringent regulations as we have in most economies that, act as barriers to entry, especially for businesses? Over to you. Let's hear what you have to say. I mean, not to stay because I still have a couple of follow-up questions to you.
Thank you, Austin. Morning, everyone, and morning, Africa. And I'm happy to be here again. My take on this issue is I'm also invested in this kind of topic because it really affects what I want to do in the future. And I think it's one of the factors also that have hindered me to start what I was supposed to do, because I agree with everyone here that I think we can agree that most banks, most commercial banks, they are reserves and they avoid risks. And we both know that small medium enterprises are very risky at the start because you don't know where they are heading. So most of the times you start, you don't have your books right, you don't have maybe your market research right, and maybe you did the market research, but when you get to the market, it changes and it reacts in a different way that you maybe you imagined or you planned. And that affects the outcome of the business. And the banks, they don't want to be on the wrong side when things are going wrong. And it's an issue that has been there, and there is not really much that can be done for now. But what I think must be done is through policy manipulations. Like, for instance, in Rwanda, they have, I don't know how it is going to be implemented, but they have launched, our pension scheme, our mandatory pension scheme, governed by the government. They have created a small medium enterprises funding, uh, like funding group aside from what they used to do. They are used to investing in government treasury bonds, other commercial banks treasury bonds, and real estate. But that's it. Not in small enterprises that are manufacturing, maybe selling goods and services, but they have launched a fund and it's a really big lot of money, but I don't know how they are going to implement it and how they are going to be issued. Because most of the case, there are many issues. Like if the bank is going to give a loan to a small enterprise, they need you must have been operating for 2 years, you must show us positive cash flow, you must show us these kind of things. But most of the small businesses doesn't have that. Let's say if you are going to do agriculture, there is no way you can have those books right if you are just starting. I think it's the most crucial part. So what I'm saying that maybe must be implemented, there is these NGOs and other partners in business that provide incubator programs where they train entrepreneurs, and you can stay there for 3 or 4 months telling you how you should run your business. I think that should be done while they know that they are facilitating you. Once they know that you are ready, they can link you up with the commercial banks, and then you can get the loan. And other thing is expensive loans in Rwanda. I think it's also in Africa. Imagine if you are doing a business and then you get a loan that has interest rate of 15 and up. You are, I think when you make profit, the profit you make is going straight to the bank, not to your pocket. Even though you are doing great, even though you try to do your business, you will end up making a loss because the liabilities are bigger than what you are gaining. If you are paying 15% to the bank, imagine how much money you give them per year. If you make 1 million, you are giving them 150, and it is compounding always. So you keep paying them always, 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 and it's not fair to the small businesses because they must bear with us. You start your business, and then because of course they have expertise and they know how things work, they should be the one taking the risk with you and guiding you through the way. You are doing this, but other business that are doing the same thing that you are doing, they do this way. What do you think? And they guide you through that. And when you strive, the banks also strive because again, you are also developing the economy and you are giving them money back. That's my take.
Thank you so much, Remy. Just again to understand, and thank you for bringing two pertinent issues, policy manipulation. We ought to really look onto the policies because we even spoke about when we had Jocelyn contributing on, the fact that monetary financial institutions are highly regulated. So we have to really ask ourselves, who do we have these regulations for? Who do we benefit this when we have these policies? And you brought this up again, but again, you also spoke about expensive loans, 15% interest. You've given an example, and of course, yes, similarly across most governments or most economies in Africa. But again, we looked onto the aspect of interest rates being very high because the risk towards lending to micro, small, and medium enterprises are super high. And I'm happy that you've gone beyond telling us what you ought to be done. This is totally, I totally agree with you. But I want to understand from the businesses. When I was walking down the streets in an area called downtown Rwanda, there are a lot of petty traders, okay, selling different products alongside the streets. The products are very good quality. And I was just thinking, and I'm thinking as you're speaking, Remy from Rwanda, that now these businesses, these women and young people and men in the streets and all the chain of businesses there, if they're able to grow their businesses, they're able to support the growth of other businesses. I think this was also your comment last week, if I recall it very well, that when you support someone, the very same people are going to support these other businesses, and hence they grow. But how then, Remy, what is your take? And I mean, Nata, you will respond to this. What then can be done or should be done so that we are able to support petty businesses so that they're able to grow, they're able to expand, so that we grow as countries, we grow as continent. What should be done to these petty business traders?
Thank you so much. What I believe should be done, it's in two parts. The first one is to the part of the government. These petty and small traders should be regulated and should be registered so that, like, for instance, if I'm the investor, let's say I'm saving a few money on the pocket, maybe because here in Rwanda it's very common to have these common groups for savings. We call them Ibimina, but I don't know how you call them in your country, but like you can join like 5 or 6 co-workers at work and you contribute monthly and raise money and give it to someone, and then you rotate each and every month. Or you save the money in a pool, and if someone needs a quick cash, you can give them the money and they give you back with a little interest monthly. And these kind of groups, they are the ones that are even now making business run, because if someone is, let's say, uh, a, a distributor of products, and sometimes they get a bulk of orders that require a cash flow that they don't have. Sometimes they go to these kind of groups and they ask for money, and you know that your money is going to be back, let's say in 2 weeks. You ask for a month, and then they give you cash. You go and finance your distribution, and then when you get your money back, you bring it back and pay. But the reason why I brought the government is sometimes people don't trust each other. You might have a small established business, but when someone give you the money, you disappear, and that is not uh, helpful to the one who is investing. So what I'm saying is, if there is a way that we could trust those businesses, and we know that they are regulated, and even if there is a guarantee somewhere that if you invest in this business and maybe they disappear and you have already invested in them, maybe there is a way the government is going to follow up on that and make you gain your money back. It will be safe for us to think about supporting each other, because you might see that a business is going to thrive, yes, but you don't trust the process. And if you trusted it, I believe that that should be a way of saving, because imagine if you are saving in the bank, the average interest rate on savings is between 7 and 10, right? But if you are going to get a loan from the bank, it's between 15 and 20, which means there is no way that that gap is just the interest, is just the profits for commercial banks, not for us. But if I know that instead of saving my 1 million in the bank and get 7%, I can invest it in a small business. Small business do way better than others. And as we know, our economies, not only Rwanda, but other African countries, if you look at the reports that are issued every year, we are thriving and our economies are growing rapidly. So if we invest in those small businesses, we are supporting also the government and we are supporting our economies to grow together. And as I said last time, if our businesses and our people are thriving, our lives also becomes better because there is a lot of money flowing in the community and the lives are improved and the buying power is also improved, which increases our livelihood. Yeah, that's my take.
Absolutely, Remy. Thank you so much. When I come back to you, will be what is happening in Rwanda and your parting remark to Africa. Aminata, let me talk to you now. Tell me, there's a street vendor right across where you are who is selling chapatis and vitumbua and soup on the street. How can we make them be so trusted as Remy is just said, trustworthiness. You spoke earlier on credit scoring. How can we ensure that these vendors, food vendors, street vendors who are selling products that we buy them day in, day out, increase their credit scoring so that they're able to access credit facilities and they're able to grow and grow their businesses? Aminata, over to you.
Thank you, Austin. Now, speaking of these street vendors and mamambogas, first for us to see economic growth as a nation, these small business owners need to scale up. Now, for them to scale up, for me, it's two major points. One, financial literacy and capacity building. And number two, tax harmonization. Now, let me break it down briefly. Today, if we train this mamamboga on credit facilities and financial planning and give them a bit of financial management education, this will give them an opportunity to attract attract investors, grow their capital. Then it would also give them confidence as lenders, because to scale up, you need capital, you need money to scale up. Now, if you have the required knowledge to work with lended money and return it and lend again and return it, that's where we see growth and scaling up. But then again, let me give an example of Tanzania. Today, if I register a business, whether it's a company, whether it's a business name, for me to get a license, I first need to have a TIN number. I first need to have tax clearance. So I am now subjected to paying tax for a business that I've not even started operating on. I don't know if that really makes sense. Because to be able to access serious funds from banks or microfinances, we need these businesses to be registered. Now, the reason most of these MSMEs are not registered is because of that huge tax burden. What if, we'd say that we are going to give a tax grace period of, let's say, 2 years. If we are able to give big investors a grace period for tax, why can't we give our MSMEs the similar grace period? 2 years is not a long time for someone to practice whatever they have learned over whatever credit management and lending money and returning money and basically scaling up their business. 2 years is not a long time, because you see, this money that we claim we are losing out of tax from MSMEs, we are spending more than that amount to again finance things that these MSMEs would have catered for on their own. So why don't we think of tax harmonization for MSMEs? That's my take. Over to you, Austin.
Thank you so much. And you've really, when you're bringing about huge tax burden and giving tax holidays to businesses, you took me back to, I think, Mauritius, if I'm not mistaken, whereby they give you a tax holiday. So if you're employed today, or if you want to start a business today, they give you a facility. So they give you a loan, then they give you, I think, 1 or 2 year holiday, tax holiday. And if businesses do not go well as you anticipated, you're reinstated back to your job. Okay, this is one of the countries of I take personally as countries of example. But again, Kenya, a couple of years back when I worked for a bank, when I worked for allow me to give credit to KCB Bank in Kenya, they used to have some people who had invested on de-risking the loans to Uakali. So what they did was they deposited the money into the bank to act as collateral to Juakali. You see these street vendors, etc., in Kenya, and they did very well. So they would go to the bank. They would not have stringent, policies towards acquiring facilities, and then they would be able to access the loans. Someone behind, they were not public. Someone behind had de-risked, had taken the collateral bit of it. So they are able to take it at lower interest rates, but again, they're able to access capital very swiftly. And I totally agree with you. Something ought to be done. We give tax holidays for foreign investors, but we would not be able to give tax holidays to our own people so that they're able to grow their businesses. They're able to create credit history. They're able to develop cash flows. They're able to grow collateral where necessary and hence reduce the risk from the assessment that will be done. And this is all, as Remy said, regulatory issues. Thank you very much. As we come close to the end of the program, Aminata, let me start with Remy, but let me start with you, Aminata. You're wearing red, so it's a portray that it's power, authority, and you have it. What is happening in Arusha this week, this coming week, this past week? What has happened? What is happening?
Um, there's a city of so many things, tourism being the center of it, and basically a lot has been happening. We host conferences every now and then where people discuss and share ideas on different matters affecting our continent. And one major thing I would say is Arusha has maintained that state of peace, that ambience, that welcoming ambience for people to keep coming and for us to keep raising the flag of Tanzania.
Beautiful. Do you have an idea, or do you happen to know that on the 26th of February, we have such a huge event in Arusha whereby we're going to bring all the religious leaders, different leaders, cultural leaders, like the chiefs, to celebrate the National Day for Peace and Security in Tanzania. It's happening in Arusha on the 26th.
Oh, that's really awesome. I didn't know about it. That's really nice. And I think it is actually very strategic to have it in Arusha, considering that 2025 is an election year for Tanzania, and off on Arusha, because Arusha has been famous for that chaotic space, and hosting all these people, I believe, will be impactful. And I look forward to words of encouragement. I look forward to just good things from these people.
Mhm.
And now that we are going to elections, we don't know what's going to happen, but having religious leaders and cultural leaders in Arusha will actually send a message to the people of Arusha and the rest of the country that we stand for Tanzania as a country, and violence for us is nothing. We are not getting into violence.
And we shall not have it. Thank you very much. And let your parting remark be.
Definitely. As of the topic today, the only thing that I would want to emphasize on, is financial literacy for MSMEs, and this doesn't necessarily have to be offered for free. As an MSME, you want to scale up, you want to grow, go seek that knowledge, go seek education on that. Then we shall keep making noise on the tax reforms and all that. Because even this initiative that's being done by government, which is actually very good, and I would like to congratulate the government of the United Republic of Tanzania, giving loans that have no interest is one step. But the amount of money that people end up paying for tax, that tax burden, we need to think through. Otherwise, we're just playing. We're just watering the garden while it's already raining. Over to you, Austin, and thank you very much.
Thank you so much. And today, you ladies are coming with powerful quotations. We are watering the gardens that it is already raining. Thanks to you. Elion Jocelyn from CRDB says, "Don't trust money, trust the person." It's a very powerful quotation. Remy, over to you. What is happening in Rwanda and what would your parting remark be?
Thank you much, Austin. There is not really much going on in Rwanda right now, in particular this week, but as you know, there is tension growing up in this region in relation to DRC and Rwanda conflict. And there's not much to say about that. I think we leave it to the process to be done and see how it goes. But internally, there's not that many things. But one thing that I want to mention, when we started the program, you mentioned about how things are going to be cashless and most of people are embracing the process, where motorcycles, cabs, restaurants, everywhere you are paying with Momo. And here in Rwanda, I think our central bank have picked it up and they have been drafting a policy where they are going to integrate all these mobile money providers to reduce the fees, because when you are going to buy a mandazi, you pay and they charge you a fee. When you are going to withdraw money, you get charged. But now they are going to regulate it and combine all of them together, so that when you are transferring money from, let's say, Airtel to MTN, you don't get charged. You are going to send money from bank to your Momo, you don't get charged, and then maybe you pay a fee when you are buying for services or when you are withdrawing cash. I think that will be really helpful and also an incentive to people who want to use this kind of service, and it will be one step ahead towards cashless economy. And my take on today's agenda we had, it will be related to what my fellow colleague mentioned about also financial literacy, because at the end of the day, if you don't have the information, you pay for it in one way or another. And when it comes to paying it unintentionally, it charges you more, because the money you pay in losses, the money you pay in taxes that you don't know, the money you pay in let's say when you don't pay your taxes right and they fine you, they are way much higher than the money you can pay to get those information before you start your business. And what I must encourage also to the government and policymakers side, also involve our development banks in this process of sponsoring small enterprises, because they are sitting with money which have low interest rate, and they are only giving to those established companies which are way much doing better than these small enterprises. And if you call yourself a development bank, you should be also supporting these small people to develop and grow. Otherwise, we are not going to grow these small businesses if they don't have access to finance. Thank you.
Remy, thank you so much. On the first aspect, all I can say and remind the entire African continent is Africa, we are stronger together and we need to unite. Unification that I'm talking about here, Remy, is, we have to be one in body, mind, and spirit. We have to come together and stand and defend our country, defend our continent. I always tell people that this is the only continent we have. You can't go to Europe, you can't go to Asia, you can't go to the US of A and say, this is my continent. Okay? You're an African, you belong to the African continent. So we are stronger together. And we really need to pray about all the instability that comes across the continent, and really sway it aside and stand united as one. But really, this is for me to really thank you yet again, Remy. It's unfortunate that we could not meet when I came over, but I still remember my promise, and I will keep my promise when I next visit. I want, just before we close the program for the day, tell you the project, that the topic for next week. We are going to look onto the youth in leadership. Aminata, we are going to look onto youth in leadership. Africa, we are going to look onto youth in leadership. How and why should we prepare the young people to become the future leaders, or the leaders of tomorrow? Why and how should we prepare the young people to become the leaders of tomorrow? So this is once again to really thank um, Remy for your time, always to be with us on Wake Up Africa. We are Remy, you and me, and everybody else. Aminata, Alan Subi, Talks, and everybody that joins in a very special way. Patricia Ndede from Kenya, Essa behind the screen, Noreen behind the screen. We are going to rewrite the Africa's history. We are going to really nail it and rewrite change the narratives of Africa through Wake Up Africa. So this is really to thank you for constantly being with us. I want to also extend a very big thank you to Tanzania Bankers Association for availing their time this morning and contribute. We had Jocelyn uh, Makule from CRDB Bank uh, sharing their take on why financial institutions hesitate to lend money to micro and small medium enterprises, and everything that has transversed over this discussion this day has resonated towards what Jocelyn has contributed uh, towards, the risk history of the credit to the person asking for credit. And they've taken a practical, pragmatic approach towards ensuring people have access by going with them through that journey, through that process, and hence have them graduate to acquiring credit so that they're able to grow businesses. But I would also like to thank my producers, S and Noreen, constantly for ensuring that Wake Up Africa is up and we are rewriting Africa's narrative. And as we are looking forward to looking on to growing leaders in Africa, growing leaders that are civic, are passionate, driven by passion to really bring about changes in Africa. We are going to look onto that next week. But again, appreciating all the contribution. You spoke about earlier on. Aminata spoke about, financial literacy. We need to ensure that people have the financial literacy, because once you have that knowledge, then you're able to solve and address challenges that you have to, as far as access to capital is concerned. Huge tax burden. Again, it's not our call, but it is our wake up call to the African governments, to Wake Up Africa, to really consider what it takes when you impose tax burden to a lady, to a street vendor in the street. What does that mean? When someone wants to start a business and there's a huge tax, what does that mean? When interest rates are very high, as you rightly said, Remy, what does that mean? Looking onto good rich countries like Kenya, when they had the Hustlers Fund, which is still ongoing, supporting Juakali, small businesses, de-risking the loans, etc., etc. Credit scoring, again, it's our call that we ensure that we have credit scoring, but again, integrating the systems, It's critical and it is vital that the government should really encourage. And TBA, as you're following this program, you should really see to it as we are cleaning the data example that was given by CRDB Bank. We ought to integrate our systems. CRDB Bank should be able to give me a loan by looking onto my credit history through the mobile network that I operate with. You see, they should be able to see and evaluate my performance through that. Do we still have systems that integrate, that work together towards supporting businesses in Africa? And really,
Yes.
research ought to be done, looking onto what are the countries doing, what have they been able to do, that they've been able to extend credit facilities within 24 hours or 48 hours threshold. Because the more you stay with an application, the less important it becomes. I want credit today to do something today so that I'm able to, do business today and tomorrow. If you give me that credit 6 months down the line, what can I do with that facility? There's nothing more I can do with it. I will use it unwisely and end up into creating bad debts. So this is really to thank you, Africa. We are changing and we are rewriting our narratives. Yes, we can, but we have to come together. We have to build that trust within ourselves. We have to unite as the continent so that we are able to change the policies, we're able to inform the policies, we're able to create what, again, just like that said, uh, favorable, intentional favorable conditions for businesses to thrive. And through this, we're able to grow businesses. Through this, we're able to grow economies. Through this, we're able to grow